All right, we have a good number of people that are connected right now. So I think we can start. I need to turn off anything that I'm not using because I don't want much distraction on my PC tonight. So I'm just going to take off anything that I'm not using. All right. So it's 2 minutes after 9 and we have to start. The others will meet us as we go ahead. I still have a lot of people joining us. So we'll just continue. They will join us as we go along. How are you doing? Happy Sunday to you. I just came in from a hangout. I took Madam out for some weekend. So I just came in a few minutes ago. So I hope you had fun too. I actually had a lot of fun. Today's service was interesting. And I decided to have some fun after that. Okay. So I hope your day was as beautiful as mine because my week was nice. Even though Friday wasn't very profitable for us in the market, but we made good profit throughout the week for the rest of the week, so it was not much of a problem. So we still did okay. Alright, so on that note, we're going to start the lesson, the training for today. Tonight we might not look at any chart at all. We're just going to share a couple of things together because I realized that there are a few issues that needs to be dealt with immediately. If we don't deal with them now, they will affect some of us as we go along, especially for those who are taking the signals that I'm posting, as well as those who are taking the mentorship and are training and at the same time trying to trade on their own. I know you'll be practicing a lot. You'll be taking a lot of trades on your own. I hope everyone can hear me clearly, please. If you can't hear me, please put it in writing. Let me know that you can't hear me. Try not to raise my voice too much. I've eaten a lot of oily food today, so my voice is kind of weak. So I don't want to stress my head and my voice tonight. So I hope everyone can hear me. You can put down your hands now. Okay, let's put down our hands now. I believe that almost all of you can hear me. So let it be only those who cannot hear me that will raise their hand. So if you know you cannot hear me, please raise your hand. That's how I will catch people who do not know the difference between raise your hand and put down your hand on. Because if you can hear me, you should not raise your hand, right? Alright, so let's go straight into the slide. I'm going to share my screen and we'll get started immediately. So tonight we're talking about trading psychology and risk management. Today is 12th of February 2023. I had to put together a slide to make it easier for us and for you because I know you'll be writing. So I wanted to be able to write something down as we go along, and everything you write, please make sure that you're writing in your trading journal. Take note of that. Write everything we are doing tonight in your trading journal so that it can be constant reminder for you as we continue in our trainings and our mentorship program. Okay, so please take note of that. I've been a bit stressed today, even though it's a good stress. I've been a bit stressed, so forgive me. I'm not in my usual element. So today we're talking about trading psychology and risk management. If we don't take care of this, we are going to be in trouble. So I want to make a few statements quickly before we go deeply into the training per se. The first of them is that the trading is a game of patience. Trading in the financial market is a game of patience. And if you are not patient, you are going to run into trouble. And one of the troubles, or one of the worst troubles that traders can encounter in the course of their trading experience is to lose their money. So if you are not patient, you might end up losing your money. And this is the reason why we're having this training today, because trading is a game of patience and it requires a lot of patience on the part of the trader or the would-be trader. So that's the first statement. I hope you have written that down. It's very, very important that you write it down. The second statement is that risk management is king. In this industry, risk management is king. If you don't take care of risk management, you would be in a hot soup too if you are trading the market without proper risk management. So take note of that too. risk management is king. I hope we have written that down. So I'm going to move forward. Now, your trading strategy is very, very important. Your trading strategy is very important. You don't just jump into the market. You don't just assume what the market is doing. You have to be sure what you know the market is doing based on your trading strategy. Your trading strategy is also called your trading style, which is also called your trading plan. Okay, so your trading strategy is always very, very important. Take note of that. And finally, final statement I am going to make, opening statement now. My final opening statement is that trading psychology separates losers from winners in the financial market. If you see anybody winning in the financial market, any of us, people like me, those of us who are in the 5%, we are only in that 5% because of our trading psychology. If you mess up the trading psychology part of trading, you have messed up all of trading. One of my mentors says that in forex trading is 10% skills, 10% skills and strategy, and 90% psychology. 10% skills and strategy, and 90% psychology. So, if you have all the skills in the world, no matter how awesome your strategy may be, without the right trading psychology, you are still going to be a loser in this industry. And that is why we have to talk about trading psychology, and it's very, very powerful. So we're going to be dealing with that today. So what exactly are the issues that traders face in the market today? Some of the major issues that traders face in the market today are: number one, half-baked trading analysis. Half-baked trading analysis. They really don't do enough analysis to understand what the market is doing before they jump into the market. Sometimes maybe because they are too impatient, or sometimes because they really didn't know. So it might be as a result of ignorance, or it might be as a result of impatience. But whatever it is, if your analysis is not sound, it's a problem for us. The second factor is the greed factor. Second problem is the greed factor. Greed sometimes takes over a trader, and at the end of the day, your winning trade becomes a losing trade. And at the end of the day, sometimes you cut a winning trade too quickly, or you let a losing trade run for too long because of greed. Now, the third thing is knowing your trading style or knowing your trading plan. If you don't have a trading plan, you don't have a trading style, or you have but you don't know it well enough, you don't even know how to find those patterns in the market, then you are going to have problem. So which is the reason why knowing your trading style is one of the biggest problems that traders face in the market today. Now the next problem is fear of the market. Fear of the market. Sometimes the traders are so afraid of the market, maybe because of things they have heard. Someone has told you that only about 5% of traders make money, like I've already told you guys. So because of that fear that, who am I to qualify to be one of those 5%, we end up losing money. Or sometimes we just get so distracted by the things that are happening around us that we become so fearful of the market. It's a serious problem in the forex industry today. Another problem is revenge trading. Most of the time when I lose money, or when I lose a trade and it hits me very hard, I may decide not to trade again for that day, which was what happened on Friday. There were still other trades anyway, but I decided not to drop the trades anymore. Even though at the end of the day, the trades that we took that lost in the morning, I ended up winning that trade because I have very good capital, so I could stand it, I could wait it out. So I waited that trade out, I won the trade. But because my people did not win that trade, I didn't trade anymore for Friday. So it happens like that. However, some traders are so naive and so childish in their mind that once they lose a trade, they go into a revenge spree. They want to beat the market, they want to hit the market hard. So they come back thinking that I'm going to revenge. And because of that emotion of revenge that is running in their head, they end up losing more. And the more they lose, the more they want to revenge until they blow up their accounts. Another problem that we have in the trading market today is the problem of people comparing between demo and live account. See, these two are not the same, trust me. If you trade on the demo account, you can take a demo account from 50,000 or even 10,000 to 100,000 very easy. But try that on a live account. Give you a $10,000 live account or $50,000 live account, you end up blowing the live account. Why? Because these two markets are not the same. there's not a lot of regulation on the demo account as compared to the live account. So whatever you can do on the demo account, don't expect always the same thing to happen on the live account. Now, I also see these traders do this a lot. They have a live account, they have a demo account, they are practicing on their demo account, they are taking signals on their live account, and then they mistakenly take the demo trade on a live account and blow up their account. So, as much as possible, try to understand the difference between these two and don't mix them up at all. Okay? We are going to be touching more on this in the course of future trainings anyway, but these are just summaries. Finally, analysis of losing trades. A lot of traders do not do this. As a matter of fact, 90% of traders who are losers today are losers because they don't analyze their losing trades. If they analyze their losing trades, they will understand the reason why that trade lost. And if they don't understand why their trade lost, then they don't understand their system, the strategy, and their plan very well enough. So they need to go back and learn that very well. So you need to analyze every losing trade. This is one of the key things I'm going to focus on today as we go into our trading on psychology. So let's get to it. What exactly is trading psychology? Your trading psychology is a collection of emotions that a trader faces in the market, especially in the course of trading, whether during the day, during the week, during the month, or during the year. Series of emotions, a collection of emotions that a trader has to deal with while they're in the market. Trading psychology is different from one person to the other. What I may be able to deal with as a trader will be different from what another trader will be able to deal with. Our psychologies are different, and that is the way it is with each person. Now, sometimes it may take years for a trader to master and understand his or her own personal trading psychology enough to not get affected by it. Until you get to the point where events of the market do not really affect you so much, doesn't affect your emotions that much, you are going to continue to go up and down, as if you are in a wave. And that is the reason why I decided that we should take this training on trading psychology today. Now, sometimes emotions can lead a trader to make the wrong decision in the market. Emotions can make a trader to take the wrong decision in the market. Now, when you say it makes a trader to take the wrong decision, sometimes the emotion may happen before you even lose a trade. Maybe as you are entering the trade, maybe you look at how the thing is just going. You open the chart and you just see long candles forming in a bearish mode, and you just say, see how the market is going. My market is very bullish today. Without analysis, without anything, you just jump into a buy. Unfortunately, the market has just hit a zone, a very powerful supply zone, and before you know what's up, supply comes in and the market drops heavily, gives you a long candle, and before you know what's up, it wipes out your account. And it looks as if it's village people that are personally targeting you, like they were waiting for you to enter the trade before they turn the market around. They don't want you to succeed. That's the reason that is happening. No, that's not the reason. Okay, it is because you allowed emotions to take over the moment you opened your chart. Now, sometimes emotions can take over after you have lost a trade, after you have lost some trades, and that is what happens when it comes to revenge trading that we talked about in the previous slide here. Revenge trading. So emotions can take over and cause you to now begin to make mistakes. You won't be able to patiently analyze the market well enough to know whether it is okay to get in or not. So you just start jumping into every trade, just start looking for trades to take all over the place, just because you want to meet your target for the day. However, excuse me. However, I tell my students, either the mentorship students or free students, I tell them, always set a target for yourself. Not only a positive target, but also a negative target. When I say a positive target or negative target, in a day, set a target of how much you are willing to win for that day. And the moment you hit that target, stop trading. In a day, also set a target of how much you are willing to lose at the maximum. The moment you hit that loss target, stop trading. It doesn't matter whether you hit it in one trade or in 2 trades or in 10 trades. The moment you hit that target, say in a day I want to win, I want to make 150 pips, or I want to make 30 pips that will give me $15, depending on your lot sizes anyway. So I want to make 30 pips. The moment you hit 30 pips, you don't trade anymore for that day. And if you say today the highest I am willing to lose is 60 pips, the moment you hit a negative of 60 pips, it doesn't matter how much is this in dollar value, depends on your lot size. But what is constant is the pip number. So the moment you hit that 60 pips, you are done for the day. You are not taking any trade. No matter how promising the setup may be, you don't trade it anymore. So this is what happens when you have mastered your emotion very well. It takes a mastery of trading psychology to be in the right mindset or the right frame of mind to make profitable trading decisions. It takes a mastery of the trading psychology to be able to do that. So I'm hoping that at the end of the training today, you'll be able to learn to control your emotions and not allow your emotions to control you, because as a trader, that is the first thing and the most important thing for your profitable trading journey. If you miss that, I can almost say that you cannot be one of those 5% that are profitable in the market. I can almost say with all assurance and guarantee that you're not going to be profitable if you miss that point. So learn to control your emotions. Don't let your emotions control you. So let's look at what should be your trading style or your trading strategy. Your trading strategy should be simple. It should be clear and it should be written down. That is why you have this journal. It should be clear. It should be simple. Something you can look at a glance and understand exactly what you have put there. It should be simple. Something that anybody who looks at it would be able to understand it as well. It should be clear. It should be clear, nothing ambiguous. If you are using anything, if you are using any, what do you call them? If you are using any instruments, okay? Whether you are using bots, whether you are using moving averages, whatever it is that you are using to analyze your market, you must state it clearly in your trading strategy. And the position they must be before you can take a trade. So you have a pre-trade plan, you have a running trade plan, you have a post-trade plan. Before you can enter a trade, what do you have to see? What are the indicators you are using? How are those indicators supposed to be set up? What time frames are you going to be trading on? What time of the day will you be trading? What days of the week will you be trading? It's not compulsory you must trade every day. I'll get to that shortly. So you need to have a clear plan, and then you have to write it down somewhere. You have to write it down somewhere. Even the Bible understands the importance of writing down things. That's why it says, write the vision, make it plain. Okay? So you need to write it down. I came to understand the power of writing. If you just think you know it in your head, it's not enough. But the moment you begin to write it down, it's like you are instructing yourself. You are not instructing somebody else anymore. Your brain now reads it as if it's an instruction to you. It becomes easier for your brain to comprehend it and to attach importance to that information the moment it is written down. So always endeavor to put whatever your trading plan, your trading style, your trading strategy is, endeavor to put it down in black and white. That's why you have a trading journal. So let's get to it. Risk management. What are the things you want to look for managing your risk or your money? Number one, you need to check your risk level for each day. How much are you willing to risk per trade? How much are you willing to risk per day? Check your risk level. Know your risk level. Some days, on some trade, you risk higher. On some trade, you risk lower. But whatever it is you are risking, ensure that you know it even before you get into the trade. It's not when the trade is running that you can now begin to say, this thing has reached $50, oh. Okay, let me wait it to turn around. Oh, it has reached $70, oh. It has reached minus 90, oh. Hey, should I close it? If I close it now, that's not how to do it. You must know beforehand that this trade I am taking, I can only afford to risk $20 on it. I can only afford to risk 20 pips on it. I can only afford to reach 30 pips on it. And then you set your stop loss. Even if you don't set your stop loss, like some of us, personally, I don't always like to set my stop loss. I only do it once in a while. If I don't have to, stay around and monitor my trade. Even though one of the things that we shouldn't do is babysit our trade, which is what I'll talk about later on. But on days where I don't set my stop loss, I have to watch my trade. Now, on days when I don't get to watch my trade, then when I get to watch my trade, I don't bother to set the stop loss. But instead of setting the stop loss, I put a horizontal line there so that the moment my price hits that point, I don't need to be looking to calculate. The moment I see price at that line, I know it has hit my stop loss. I close the trade manually automatically for myself. That is how much I am willing to risk on that single trade, and I will not risk more than that. So understand your risk level. Set your own risk level. In a day, how much are you willing to risk? And that's what I call your negative target. The moment you hit a negative target, stop trading and close it off for that day. As a matter of fact, shut down your system, shut down your MT4 on your phone, and don't open it again for that day, unless you just want to analyze in preparation for the next day, not to take any trade. Even if a trading opportunity shows up while you're analyzing, ignore it. Just close your eyes and remove your face. I have seen traders blow $10,000 accounts on that after winning for the day. I had a friend like that back then in Calabar. His name is Theo. I don't know how many people are based in Calabar here. His name was Theo. We set up Active Code Trading Academy together. We started it together. But I didn't really like his administrative style. So I had to pull out of the business and I left him to manage it. Anyway, that's a story for another day. The business is under waters now. So that's by the way. Now, my friend, there was a day he was trading. He's also not a bad trader. He's not bad. We grew together. We trained together. We learned together at a point. We worked together at a point. So he was trading a day, and on that day he was really doing well. I think he grew his account by more than 60% in one day, and he was very excited, and he kept trading. And then I told him, as at this time it was around 3 p.m. or thereabout, and I told him, Theo, stop trading. Don't enter the market again, no matter the setup you see. And he said, no problem. We agreed we had closed for the day. And I went home, and he went home too. Only for my friend to get home. And the next day, by the time I saw him, I was like, Theo Alpha, let's get to the market. What are we doing today? And he said, I blew my account yesterday. I was like, what? You took an account of, I think, $1,200 or so to close to $2,000, and you are telling me you blew it that same yesterday? And he said, after I got home, after I rested for a while, I just said, let me just look at the market and see what's going on. And then he just saw a trade setup that was looking so good. Everything was in place. And he risked it all on that one trade, thinking that he would double his account again. And that was how he blew his account. So I've seen a lot of traders make that mistake. Set your target and stick with it. Now, there's what we call mid-trade analysis. Mid-trade analysis is looking at your trade while it is running and then reanalyzing again. For instance, there are sometimes I will set a stop loss at 60 pips, but I know in my mind that that trade should never hit 30 pips in the negative. It should never happen. But to be on the safe side anyway, I set my stop loss at 60 pips. The moment I see that trade approaching 30 pips in the negative, I want to look at the chart again. I will switch to a higher time frame. Go to monthly, go to weekly, go to daily. Look at the chart again and reanalyze the market and be sure that I am in the right position. If I realize while reanalyzing again that I am not in the right position, I will close that trade at that 30 something pips instead of waiting for it to hit my stop loss, because I already know that this is not going to go my way. I made a mistake before I took the trade. I had done that some days ago. I think that was on Tuesday or Wednesday. I had an analysis that I thought was perfect on a smaller time. I think it was whether USD JPY or GBP JPY, and I gave that signal, and we all took the trade. But as the trade was going, I looked at the trade again, and it was shooting higher than it's supposed to. It had not reached stop loss. In fact, it had not even reached halfway to stop loss. But I had to do analysis again. And when I looked at it again, I realized that no, this trade is going to hit our stop loss and move a little higher before it started coming down. So I just had to drop a message that everybody should close that trade and hold. And that was what we did. Okay? So it happens like that. Mid-trade analysis is very important too sometimes. There's what we call after-trade analysis. When you win a trade, confirm that your analysis was right. That was why you won that trade, not because it was a mistake or news came and pushed the trade in your direction. And when you lose a trade, also check to be sure that it wasn't because of your analysis. Because as you will find out later, it is possible for you to get everything right and still lose your trade. It can happen. Even the best of us have losing trades. even the best of us, even my trainers and my own mentors that I look up to as the gurus in this business. Me, I'm just a baby, a child when it comes to forex trading. Trust me, when I'm looking at my veterans of 30, 40, 50 years of trading, they still lose trades. And they come and they tell us, today I ran a negative of $35,000, and I'm like, whoa, but why would I do that? I don't have that kind of power yet to lose $35,000. I could die straight. Okay? but these are institutional traders, so they have $1 million worth of accounts, so they can afford to lose $35,000 and go shake them. But that kind of loss will shake my life, not just me. It will shake my destiny itself. All right. So another issue is the power of good capital size. Now, I get to see a lot of people come and tell me, I've funded $20, I've funded $30, I've funded $25, I've funded $18. Yes, you have tried. I understand. It's not easy. You have tried. But don't take that risk. I know why I'm saying this. Don't take that risk. If I had my way, I would not even reduce it from $200. But I know if I reduce it, if I leave it at $200, not many people will have that chance. And that's the reason why I say, okay, the barest minimum anybody should do is $40, because your broker will match your $40 with additional $40, which will mean that you have $80 to trade. It's close to $100 enough. We can manage that. But if it is less than that, I cannot guarantee that you will be able to build that account. Trust me, I can't guarantee it. So because of that, I don't even want to risk it at all. I just tell you, don't risk it. Don't risk it. If you have $20, put it in your account. Leave it there. Go and look for more money. Go and look for more $20. It's not much. I understand. It's a lot of money in the Nigerian economy of today. It might seem like it's not much to me, but it's actually a lot of money to some people. So I understand you. That's about 15,000 naira. It's not easy. Look for it. Add to it. Make it up. Okay? Make up the $40, which will be about 31,000. It will be worth it. That I can assure you. Because at that point now, I can conveniently say, take a trade. And if you hit your stop loss, don't worry about it, you recover in the next trade. But if I tell you take a trade, and in the first 3 trades, you lose, then you may not have anything left if you have less than $40 in your account. So, having said that, we proceed to the issue of signal trading. One of the biggest problems I have with signal trading, which is one of the reasons why I'm very reluctant to provide signals before. But my broker said, Sebastian, you are good at this thing. Your people love you. Why not help them and give them signal? And I said, I would love to, but... And they said, just try. And that's the reason why I'm doing this. Okay? I want to do it too. I love doing it. Even though it's stressful for me. Normally on my own, I only trade on Tuesdays, Wednesdays, and Thursdays. Only 3 days in a week. That's when I trade normally. But because of this signal now, because of this signal service, I have to trade for 5 days a week and even analyze over the weekend too in preparation for the week. Which are things I try to avoid normally because it's excess stress. After all this training, when I'm done with you now, see my systems are all in front of me. I still have to analyze as well. As you can see, you see my setup. I still have to do analysis after this. So I try to avoid this when I can. But where I can't help it, I have to. So you don't have to trade every day. Even if the signal is coming every day, it's not compulsory that you trade every day. Check yourself. Look at your trading style. Check your history of your trading days and your profits. Which days are you most profitable? Is it Mondays, Thursdays, and Fridays? Is it Mondays, Wednesdays, and Thursdays? Is it Monday to Wednesday? Only on Friday are the days that you lose money. And sincerely, I lose a lot on Fridays. I lose a lot on Fridays. From Thursday evening like this, I have problem winning trades. That's what I've realized from my own personal experience. So I try to avoid trading on those days. Mondays too, the market is always too wonky. People are just coming back from the weekend, so everybody is still groggy. People are doing rubbish. So I try to avoid trading on Mondays and on Fridays. So figure out the days that works best for you. My signals will drop every day, Monday to Friday. I will try. Even if I don't take some of those trades, I will still drop the signals for you. And I will monitor it. When it hits TP, I will tell you. When it hits stop loss, I will tell you. And I won't hide anything from you. If we are not doing well, I'll tell you we are not doing well. When we are doing well, we will also celebrate together. Like Friday, we didn't celebrate because we know we didn't do well. I posted the losses anyways. So, always figure out the days that are most convenient for you. And apart from that, you don't have to take every trade. You don't have to. It's not compulsory that you must trade every signal that comes. We drop 5 trades a day, 3 trades a day, 4 trades a day. If it's only 2 that you're able to take, it's fine. Even if it's only 1, it's fine. If a matter of fact, if you don't take any trade that day, you will not die. I promise you. You will not die. I swear. You're not going to die. Okay? So it's not compulsory that you take every trade. Now, one other big issue we have is not knowing the reason for taking a trade. Even if you are in the signal room, don't just take trade because Sebastian posted the signal. Sebastian is human. He might make a mistake. I posted a trade once where I posted sell. It was crazy that day. I posted sell and the trade was actually a buy. But thankfully enough, when I posted it, I posted the stop loss and the take profit with it together. So those who know what we were doing, who know the difference between take profit and stop loss and know where they are supposed to be, looked at it. My take profit and stop loss and entry price were correct. The only problem was sell instead of buy. So one of them looked at the trade and said, boss, something is off here. Did you make profit? Did you make mistake in take profit and stop loss? Or did you make mistake in the trade we are supposed to take? Is this supposed to be a sell or a buy? Because your take profit and stop loss is telling us it's a buy, but the instruction says we should sell. And that was when I realized that I made mistake. But before I got that prompt, before somebody knocked my door and let me know, funny enough, I didn't take that trade. I wasn't trading that day, but I was dropping signals for them. Before somebody knocked on that day and let me know that something was wrong, some people are taking the trade already. These are people who just jump into signals without knowing why. So you need to at least understand the direction of the market, trends. Look at, if somebody posts a signal and says buy, that says buy, you know we are looking for buy opportunities. Go and check your trend. Go to 1 hour time frame. Go to weekly time frame. Are we in an uptrend or a downtrend? If it says buy and we are in a downtrend, find out, Oga, this market is in a downtrend on a weekly, on a daily, and on 4 hours. Why are you posting sell? And then I can tell you whether we want to trade a retracement, or I was sleeping, I didn't know what I was doing. So I could make mistakes too. You could correct me only if you know the right thing too. And that's why you should not just rely on signals. That's why I have problem with signals. Signal makes traders lazy. They get very lazy and just rely on signals. Especially if the person providing them the signal is very good, they don't want to get better. I don't like that. I want people who can trade on their own. I post 3 signals, you take 15 trades a day. That's a very good one. Even if out of your 15 trades, 5 was a loss, the remaining 10 was win, it's good enough. That means you are learning, you are growing, you are developing yourself too. Some of the materials that I give to you guys in this group are things that I paid money for and I bought them. I swear to you, go online and search for some of these things that I'm giving you. I paid for them. They are there for sale online. For those of you in the mentorship group, go and check how much the contents of the mentorship package, the vault. Go and check how much the content of that vault is. Ryan training alone, I paid $500 for it. Ryan's training alone, and you have like 6 of those training in the vault. So these are things I paid heavily for. I bought them for my own good, not for anybody else. That was before I even started, before I made up my mind that before I retire, I want to have at least 20 people who are going to continue what I am doing right now. Because I didn't want this to stop. I know I'm good at this, but I don't want it to stop at me. So I want to keep raising people until I find 20 people who can continue, and I will not have to bother my head whether they are doing well or not, because I know they will be doing well. That was when I started releasing some of these materials that I had bought to my mentorship students. Emmanuel, so you are raising a hand. Do you have a question or what? Or is that a mistake? Okay? So unless the problem is that you are not hearing me, don't raise your hand, please. And if you are not hearing me, type it out. I will see it. Trust me, I will see it immediately. Okay, don't raise your hand because I may not call you. Just type it out that you can't hear me so that I would adjust. Okay? So, know the reason for taking a trade or for taking a position in a trade. Always know. And the easiest way you can know is understanding your trend, support, resistance, at least for a start. Later on, maybe as the Spirit leads, if the Holy Spirit that is guiding me on this course decides that, Sebastian, extend supply and resistance, supply and demand and what's it called? Price action to these people in the free training, then I may decide to do free trainings on that. But for now, all that is reserved only for mentorship students. Okay, it's an advanced level of trading. It's actually a lot more profitable than supply and demand. But supply and demand too is good enough, at least for a start. Understand trend, understand supply, understand demand. By the time you are at understand resistance and support. By the time you are at a support and somebody says buy, you understand, okay, we've hit a support, we'll have a retreat, pull back from that place. So it's good to buy from that place. By the time you just hit a resistance and it's rejecting, and you see a signal that says sell, it's making sense. But by the time you hit a support, a resistance at the top, and it's retracing, and somebody says buy, at that point you are wondering, what are we buying for? So you need to know. Gabriel, put down your hand. Otherwise, I will hit you on the head with hammer. Stop asking me these questions. I have posted criteria over and over and over in the groups. By the way, I have closed the mentorship for this group. It's now back to 150,000 naira per person if you want to join the mentorship now. It was 30,000 until Tuesday, but I extended it till I think Wednesday or Thursday. But I'm not extending it beyond that for now, unless something changes. I think something might change because Tuesday is Valentine, Sunday is my birthday, so I don't know what will happen between Tuesday and Valentine. I'm still praying about it. Whatever the Holy Spirit asks me to do, I will do it by that time. But until then, just know that it's 150,000 for my mentorship. Now, there's also something called mid-trade panic. Mid-trade panic. Who is making noise? Who is coughing there? Don't cough, Ekene. Don't cough. Now, mid-trade panic happens when you take a trade and the trade seems to be going against you. Sometimes you panic. But usually I don't panic when trades are going against me, because that panic will only give you a heart attack. It doesn't bring the trade back to where you want it to go. It doesn't make the market do what you want. It just gives you a heart attack. Okay? So I try to avoid. You see, I'm growing up. I'm not growing old, I'm growing up. I like to show my gray hair, but don't mind me. It's genetics. Okay? So now, when you have a mid-trade attack or a mid-trade panic, it might push your emotion to force you to close your trade. And that's something you don't want to do. Because sometimes, trade might actually go against you for some time. And that's why when I post a signal, I give you a range of where that trade is most likely going to go. So, the trade might actually go against you up to this point. If that happens, enter another position. That's what I do. If I take a trade and it's going against me, I wait for 10, 15, 20 pips. The moment it hits minus 20 pips, I enter one more position. Or two, depending on the lot size I'm taking and my capital. Okay? Gabriel said my voice is cracking. Is he the only one that is hearing the crack? If everyone can hear the crack, please let me know. If my voice is cracking on your end, raise up your hand. Okay. Alright, a couple of people said my voice is cracking, so I guess it's the network. Give me a moment, let me switch to Airtel. Maybe that would be better. Okay, are we still here? Can you hear me now? If you can hear me, please type it out that you can hear me so I can continue. I have 11 people raising their hands. Okay. So I guess you can hear me now, right? Please, someone should let me know if you can hear me. Okay, thank you very much, Albert Emmanuel. Okay. Albert Emmanuel. I have a friend who has that exact name, Albert Emmanuel. Okay, so, alright, very good. So let me just continue. So we have mid-trade panic, and which is one of the things I want you to avoid while trading. Okay, it's only going to give you a heart attack. It's not going to make the market any better or go in your favor any more than it has been going before. Now, apart from that, we also have after loss analysis, which I've talked about before. But like I said, we cannot overemphasize it. That's the reason why I'm repeating it again. That is like the third time I am saying it. After loss analysis is very, very important. The moment you lose a trade, always find out the reason why you lost that trade and how to get better. It's very important. So let's go to the tips for managing psychology now. Tips for managing psychology. Now, the first thing you need to know that you have to have at the back of your mind every time you are taking a trade is that trading is risky and you can lose money. Trading is risky. Trust me, I'm not going to lie to you. I'm not going to mince words. Trading is very, very risky and you can lose money. As a matter of fact, you can lose everything that you have in the market. So bear that in mind as you go into the market. Now, another tip that I have for you is that you should only deposit money that you can afford to lose. Only deposit money you can afford to lose. People ask me all the time, is it okay to borrow to trade? Well, I don't see anything wrong with borrowing to trade. Some of us borrowed initially to trade too, to start. I borrowed money several times and blew them. The people I collected money from came for me, but I'm here, I'm alive, I've paid them back their money, and we are still friends. And now I'm the one borrowing them money. Do you understand? So it happens. It's okay. It's not a big deal to borrow money if you have to. But just ensure that where you are borrowing from is not the one that will cause you to jump off the third mainland bridge when you cannot pay if anything happens. Because trust me, anything can happen. No matter how good Sebastian's analysis and trades may be, anything can happen. Let me give you an example. Last week, for the greater part of last week, we made a lot of profit. Now imagine if you are using your normal regular lot sizes on Monday, on Tuesday, on Wednesday, on Thursday, and you have grown your account from $100 to like $130, and you are all to like $110, and you are thinking, this lot size, this small lot size that I'm using, these man signals have been on point every day. It's been hitting TP back to back 3-4 times a day. In fact, let me increase my lot size so that I can hit TP one more time on Friday, maybe grow my account to like $20 profit, and then I can rest. Maybe I'll withdraw that $20 and use it to manage for the weekend. And then you take Friday trade with a big lot size. You would have blown your account. And not only that, I had someone last week who sent me a message and says, Coach, I just blew my account, but it's not your fault. I said, of course, it can't be my fault. What happened? And he said, I took a trade. I didn't set, okay, I think he said take profit. I can't remember exactly how he explained it. He said he did not set stop loss, or maybe he made mistake in the stop loss, and the stop loss was so far away from where it's supposed to be. And then he did not set a TP or something. So the trade hit our take profit, but because he did not set a take profit, he did not hit his own. He kept going up, hit its own limit, and started dropping, and he was not there to see the market. So the market kept going down, went against him, got to where he entered the trade, started going negative, and kept going in negative until he blew his account. And he said, I forgot to set my stop loss. All right. Remind me of that question. How do you trade? How do you risk only 5% of your account? Remind me of that question at the end of the day. I'll try to analyze it for you. At the end of the training, I'll try to analyze it for you. Okay? So I don't want to break this training in the middle. Okay? So only deposit money you can afford to lose. Now, the second thing, don't risk it all on a single trade. Don't risk it all on a single trade. I think I will answer that question on this point now. Why you say don't risk it all on a single trade? Let me see. I already told you that if you have a $100 account, take 0.01 lot sizes, not more than 2 positions on a single trade at a time. And then we are setting our stop loss at maybe 30 or 40 pips. What that means is this. 5% of $100 is how much? $5. If you set your stop loss to 30 pips and 10 pips on 0.01 is $1. 10 pips is $1. Stop loss is 30 pips, which means that if you have 2 positions, 10 pips is $2 for you. If that trade hits your stop loss, you are going to lose $6, which is about 6% of your account. It's not too much. If you don't want to risk up to 6% of your account, it means you cannot afford to take 2 positions. You can only afford to take 1 position. That's what it means to risk only 3, because taking 1 position will mean you are risking 3% of your account. Do you understand that now? You have 30 pips as your stop loss. 10 pips is $1 on 0.01. 10 pips is $10 on 0.1. 10 pips is $100 on 1.0 standard lot. So, if you took a trade 0.01, 2 positions, it means that for every 10 pips, you are winning or losing $2 because you have 2 positions running, because 1 position is $10. So for another 10 pips, another $1 or $2 if you have 2 positions. For another 10 pips, $2 again for those who have 2 positions. So by the time you hit your stop loss at 30 pips, you are losing $6. If you set your stop loss at 40 pips, you are going to lose $8. If you set your stop loss at 50 pips, you are going to lose $10. $10 is not too much on a $100 account, but I don't like it. I prefer that you lose $5, which is 5% of your account, on 50 pip stop loss, rather than losing $10 on a 50 pip loss stop loss for a $100 account. If you have a $200 account, you can do that. When I say you have a $200 account, it means that your broker has given you extra $100 to the $100 that you deposited. That's $200. So you can risk 2 positions on that. What that now tells those of you who have $40 is that when you have $40, you can only take 1 position at a time. You cannot dare even add 1 layer. Don't try it. If the trade is going against you, you have to wait until it comes back into your profit and hit your TP. You don't have the chance that I have to add 1 more position at a higher negative, so that the moment it turns around, I am already in profit even before it got to the point where I entered the trade initially. We are going to have another training where we actually analyze all of this on the chart. But for today, we are going all theory and slideshow. But just write them down in your notebook for now. So you want to ensure that you manage just 1 position. If you have from $40 and up to $50, $60, $70. If you have up to $80, $90 that you deposited and your broker gave you additional $90 or $80, making it $180 or $160, it's still okay. You can manage 2 positions. But even though I don't really like that too, but you can manage 2 positions. But don't take those 2 positions immediately from the first entry. Take 1, wait for it to hit your TP. If it goes against you up to 15 pips in the negative, before you hit your stop loss, take another position. That makes it 2. If it ends up hitting your stop loss, you are going to hit stop loss 30 pips on one and 15 pips on the other one, which is fair. On the 30 pips, you would have lost let's say $3. On the second one, you will lose $1.50, which is just 4.5% of your account if you have a $500, if you have a $100 account. And that's fair. That's what I do. That's how I trade. So that's why if you look at my trade, you will see that I have 5 positions. They are closed. One may be $120 in profit. The other one is $90. The third one is maybe $60. The last one is probably $20. Maybe one is just $5 in profit. That one, $5, is the original trade I took. If I had left it and I did not add more positions at the top, I would have closed that trade with just $5 in profit. But because I have enough capital to add more position as it is going against me before I hit my stop loss, I make a lot more in profit, as much as $300 in profit in one single trade. So take note of that. So don't risk everything on a single trade. Always take lot sizes that are commensurate with your capital. I was going to do a spreadsheet for the lot sizing, but I forgot to do it before this training. So I'll try and do it before I sleep, and I'll post it to the group so that whatever your capital size is, you will know the lot size and how many positions you can take. I'll try and do that. Okay, so let's continue. Our tips for managing our trade psychology. Sometimes you may be wrong. Accept that you are wrong. On Friday, I was wrong. Not that I was entirely wrong anyway, but I was wrong in the sense that we entered the trade too early. We entered the trade way too early. We were supposed to wait for a pullback. If I had checked my analysis well on a higher time frame, we would not have taken that trade. Okay? If I had checked my trade on a higher time frame, we would not have taken that trade yet, as at the time we took it. We would have waited for a certain place. I ended up waiting that trade out until it got to that place, and I entered more position. I won that trade. I made over $200 on that trade on Friday. I couldn't tell you because a lot of people lost. It will seem as if I am being selfish or I was wicked. I didn't tell you guys to re-enter the trade. But I didn't want to risk, because I don't know how many people have hit their negative limit for that day on that single trade. That's why I didn't post signal again for that day. I'm trying to practice what I preach to you people too. So when you are wrong, accept that you are wrong. Sometimes you can do everything right and still lose. I said that before. You can do everything right and you still lose your trade. You can do your analysis right. You can analyze everything perfectly well. No reason at all for this trade to go negative. Despite that, don't go all in. Don't risk everything you have on any trade, no matter how sure you are of the analysis, no matter who is giving you the signal, even if it's Sebastian. Okay, so you can do everything right and you still lose. Bear that in mind. So if you lose, don't beat yourself up. Don't beat yourself up. The next tip is don't babysit your trades. Don't do it. Don't babysit your trades. You've taken a trade. You have your stop loss. You have your take profit. You have set them all. Close your MT4 and go do something else. You don't have to sit in front of the screen throughout the day. You can babysit your WhatsApp group so that when a new signal drops, you will know immediately. But don't babysit your trades. So when a signal comes, take the signal, close the MT4, and go do something else. Then watch WhatsApp. When we now announce that we have hit TP or we hit stop loss, take it in take it in stride and prepare for the next one. When the next signal drops, don't hesitate, take it and move forward. So try not to because babysitting your trade, you start watching the candles, you go up, you come down, you go up. As it's going up and coming down, going up and coming down, your heart is following it up and down, up and down, up and down. Before you know, trade like that for 2 years, you will have high blood pressure. I swear. Unless you are trading on them Unicom. If you trade live and you are babysitting your trade and you are watching candles going up, coming down, 1 minute candle, you are watching it's going up, it's coming down, it's going up, it's coming, you will have high blood pressure. You are not careful, your diabetes will join. Because the day you lose trade, you go and drink anyhow to cover up the loss or the negative feeling that you are having from the loss. So you don't want to do that. Now, also have an edge. When I say have an edge, I mean have a trading plan. Have a trading plan. Know why you are taking a trade. Know when to take a trade. Know when to get out of a trade. If you close a trade in negative, know why you are closing it in negative. If your trade hits stop loss, know why it hits stop loss. That's what we call an edge. You have an edge over the market. You have an edge over other retail traders that don't know what they are doing. We have billions of traders. Oh. We are trading trillions of dollars every day. It's a lot of money from a lot of people. Don't be one of the stupid ones among them. There are very plenty stupid ones there. Trust me, there are plenty. I've seen some of them too. I posted a signal once, and one of my students said, at the end of the day, we hit our take profit on that trade. And he sent me a message. He belongs to a lot of groups where they post signals. And he took a screenshot of all the trades that they posted. Guess what? Almost every single one of those other groups that he belongs to traded the exact opposite of what I posted. He said when he saw my signal and he saw all the other signals that they were posting, he was like, this one coach is saying I should sell. Everybody is saying buy. I think I'll go with coach. So he took a sell. We hit our take profit. And he said, and then he took a screenshot of the trades of other people in those groups and sent to me. Come and see red everywhere. And he said I was just smiling when the rest of them were crying. He said they didn't know I have a secret oracle somewhere, and I just laughed. I said, God save you that you trusted me enough to take my own signal. But you know the funny thing, I also belong to a lot of signal group where they post signals. After I posted my trade of Friday that hit stop loss, more than 6 of those groups also traded that same gold at the same position that we traded. We traded a sell. They all sold and they all lost too. So which means that there was nothing wrong with the analysis. It wasn't just time. That could happen too. So you could do everything right and you will still lose. So don't babysit your trade. Have an edge. When you have an edge, you don't really have to babysit your trades. Another thing you need to bear in mind is that the lower your win rate, the higher risk to reward you need. Now, our risk to reward in my signal group is usually 2 to 1. Let me explain what 2 to 1 means. We risk 40 pips in stop loss to win 20 pips in profit on gold. The reason why I trade like that is because I have a very high win rate. So which means that where I lose one trade, I would have won 3 trades or 4 sometimes. What that means is this. For the 4 trades that we won, times 20 pips is how many pips? 80 pips. For the 1 trade that we lost, times 40 pips stop loss is 40 pips. Overall, we are still in profit of 40 pips. That is my own trading strategy. Others are maybe 1 to 5, 1 to 10, which means that where they are risking 20 pips in stop loss, they want to win 100 pips in take profit. The problem with that is, it is a lot more difficult when your risk to reward ratio is too high. When you have a risk of reward ratio of 1 to 5, 1 to 10, it's a lot more difficult to hit that take profit. And even if you do hit it, it might take days sometimes. So you want to hold one position for 5 days, a whole week, Monday to Friday, because of 100 pips. Meanwhile, I will target 20 pips 10 times or even 20 times in that 1 week. 20 pips times 20 times, you know how much that is? That's over 400 pips. While you are chasing 100 pips, I have done 400 just because I didn't target long take profits. As I dey trade, I give you TP1 and TP2. I swear to you, I never target TP2. I swear, I don't ever set TP2. Always TP1. Because you may end up hitting TP2. Yes, a good number of times, maybe 3 out of 5, we hit TP2. But there's every chance that 4 out of 5 times we will hit TP1. So why would I want to risk it? And even if I want to risk and trade higher time, longer, and trade for TP2, I will set break even. I've explained what break even is. I will set break even so that even if it turns around, I already secure half of the profit, and then it can now go back and hit it as my entry. I don't lose anything. I only win. So I now ask myself, what's the essence of setting break even when I could just target TP1 and clear all my trades in one sweep? So I don't bother to target TP2 even though I know it's possible. In fact, TP3 is possible. In fact, TP7 is even possible. But I don't get strength. I don't stress myself. I trade like a fisherman. There are millions of fish in the river, but the fisherman will only go for the few that he wants to catch. The moment he catch those few, he will not say because there are still millions of fish there, he's not going home. He will go home. If you don't trade like a fisherman or like a hunter, you will have problem in this market. Because there will always be trade setups that will look like it's making sense to you. But if you are not careful, those trade setups will put you in the grave and send you back to the village. Now, avoid unnecessary pressure and competition. Avoid unnecessary pressure and competition. It's very, very important. Avoid unnecessary pressures and competition. Don't do it. Don't let anybody pressure you into doing things you don't want to. Some of you would have noticed that my own type of mentor, Forex mentor, is different from most people. A lot of the Forex mentors have Instagram pages, Twitter, Facebook, and everything. And on their Instagram pages, they are popping champagne and making you feel like if you are not popping champagne and feeling on top of the world, you are not achieving anything. I don't have that energy. It's not my style. I don't like pressure. And I don't like putting people under pressure too. Because I know if I do that to you, my student, you will feel pressured to want to do like me. Some of you will go and carry money that you are not supposed to use to trade just because you want to pop champagne like me. I don't want that. I want people who are ready to learn. Even if you don't have money to trade yet, get ready to learn. I gave somebody mentorship free of charge because I saw that zeal. I saw that zeal. I saw that drive. I saw that energy. I gave that person 150,000 naira worth of mentorship free of charge. So it's not a must that, at this phase of your life in forex trading, if you still have $100, $200, $300 to trade, you are still a learner. I swear to you, you are still a learner. So don't begin to feel on top of the world yet. Go and sit down and learn. Even me, I am still a learner. I'm still learning every day. Forget I'm withdrawing almost every week, minimum $150, $200, $100 every what am I saying every week? Every few days, every 2 days. I just withdrew today. I'm going to withdraw again whether on Wednesday or Thursday, depending on how I feel. If I don't feel like I need the money, I may leave it till next week. But I withdraw almost every week. I withdraw on Friday. This Friday that just passed. This Friday? Yes. Okay, Thursday. I withdraw on Thursday. I withdraw again today. Okay? It's weekend now. On Tuesday is a Valentine. I have to take the boys out. I already ordered Pampanara for them. I can afford it. But that doesn't mean I will now do it and start posting it on social media and start giving people hypertension, because no, you don't need it. So avoid anybody that will give you that kind of pressure. Push them away. If I begin to give you that pressure, let me know. Boss, you are pushing me to do things I don't want to do. Don't do it again. I swear to you, I'll pull back. I don't want to do it intentionally. So if I begin to do it unconsciously, let me know. I just want you to learn. I want you to trade by yourself. I don't need your money, and I'm not after you to make money. Don't try to make money yet. Try to learn first. My attempt at providing signal is just an assistance, like support. Okay, let me even say, as I'm putting in all the effort to learn, will hunger kill me while I'm learning? That's why I say fund your account. I'll be giving you signal. Be trading. The small $10, $15, $20 that you will make in a week. Withdraw, use it to buy rice and gari and agbado. What did what's his name? Tinubu say people should be eating in Nigeria. Gari, cassava, agbado. Use those small $20 to buy and be eating it while you are learning, so that your brain can comprehend what you are learning. See, it's not a must you pay for mentorship. There are millions of resources on the internet to teach you. It's just that you have to search and look for it. Mentorship just makes it easy to bring those resources to you, because I already compiled and arranged all of them for you. And I'm also there to guide you 24/7. That's just what mentorship does. It's not special. There's nothing special about my mentorship. I tell you, there's nothing special. It's not as if is the best thing in the world, so if you don't get it, you will not be successful in forex trading. It's a lie. Don't let me deceive you. You can be successful without mentorship, I swear. So don't put yourself under any pressure. Don't go into competition with anybody. If your village people are stressing you too much, pack your load and leave that place. If the people in your community are stressing you too much, pack your load and leave that community. Hello Chuku, please mute yourself there, or I'll kick you out of the call. Hello Chuku, mute yourself. Okay, so don't let anybody push you into pressure, please. Now, finally, always pay yourself as the market makes money available. Always pay yourself. There are two ways to do that. The first way, while you are in a trade, you took a trade, you set your take profit to 20 pips, and then the second take profit to maybe 40 or 50 pips. The moment the market hits the first take profit, don't just move the take profit forward and say, our market is doing very well, let me take 50 pips on both trades. Don't do that. Pay yourself that first one first. Collect that 20 pips, put it in your pocket, move your stop loss to your entry position, and then wait for the second TP, so that if anything happens and it turns around, you can hit your stop loss at entry and you don't lose anything. You have paid yourself small. It may be small, but you have paid yourself. Are we together? So that's one way to pay yourself. The second way to pay yourself as the market makes money available is to withdraw your winning often. It's not compulsory you must withdraw everything you win. There are people who want to compound and grow their account. It's okay. For those of you who have $40, hello Chuku, I'll kick you out again. Mute yourself, please. Are we together? There are people who want to if I remove this guy again, I'll ban him completely. He won't be able to join the call again, because I don't know why you cannot hear me. You are not in the call, you are distracting us. If you are in the call, you will hear that I said you should mute yourself. So which means you are not here. So pay yourself as the market makes money available. Don't wait until you have made all the money. No, you have $40 in your account. Broker give you extra $40, making $80, and you are trading. At the end of the week, you have made $20 in profit. It's nice. Withdraw $10. Even if you are not going to spend it yet, withdraw it and keep it. Have a second account. You can create additional account on your broker page on XM Global there. Create additional account. Withdraw the money and keep it there, so that you don't trade with it. Okay? You don't want to spend it. You don't want to use it. Just remove it from your trading account. Put it in the second account. Let it be there. And then you continue trading with what you have there. Now you have $50 plus your broker's $40. That's now $90. Keep growing. The next week you make another $20 or $30. Come on, $10. Keep for one side again. That's $7.5. If you hold $7.5 every week, do you know how much that is in a month? Oh, so you know. That's about 30,000 naira. 30,000 in a month on the side while you are learning. It's not bad at all. It's not bad. It's not bad at all. So pay yourself every week. Now, if something happens, you made a mistake, you fell asleep, you took a trade, before you set the stop loss and take profit, village people carry network and took it with them to the village, you could not find network anymore. While you are struggling with network, trade went against you and blew your account. You have $140 that you have been hiding in that place since. Bring it back. Go and do sacrifice to village people. Tell them not to seize network again. Then you can now continue to rebuild again from that small $40. But if you left everything in your account and they did that to you, they'll wipe it all away. So always pay yourself. Always. While your trade is running, pay yourself. After your trade is done, at the end of the week, I withdraw every week. Even if I will not take the money out of my account, I withdraw every week. I have 3 accounts on XM Global. One is for trading, the other 2 is to keep money. The other 2 is to keep money. So anytime I need money, I go into one of those accounts
and I drag it out of there and go my way. Because they are always there. So if something happens and I take a trade, something happens and I miss it, could happen. It could happen even to me. I could give you signal, you hit TP and I hit stop loss. Because, you know, I have five children. One of them is in the university. I have a lot I have to deal with. Madam is there. You know, when you are living in the house with women. That's why sometimes I give myself vacation and I travel like I did for the last 3 weeks. I've been traveling around all over the place. I do it sometimes. I'm home now. I'm back at home now. I'm in my home office. This is my home office. So sometimes I just get out to clear my head. A man needs to be able to do that. But then when there's no money, what will you do? Some people cannot even afford the 2-bedroom or 3-bedroom that you think is luxury. Okay? I think I'm going to have a training for men only. I'm going to call it Breadwinners, I don't know, maybe Breadwinners Bakery or something. We are going to have something for men where we would see how we can reset our head and sit down and carve something out. Men are really going through a lot right now. I know there are women who are also their own breadwinners too. We'll see what we can do about that. But specifically for men are going through a lot. So that is topic for that's something for another day anyway. I'm still thinking, the Holy Spirit just brought that a couple of days ago, so I've been thinking about it. I don't know how I'm going to handle it. Okay, just gave me that message some days ago, so I'm still thinking what I can do to support men. I don't know how I'm going to go about it. I may actually need to do a physical training for that. So that's that about those tips. So in summary, what we are trying to say is this: if you want to swim, be ready to get wet. If you want to swim, be ready to get wet. If you want to get into this market and make profit, be ready to lose some money too. If you are the kind of person who doesn't want to lose anything at all, then don't come into Forex, please. I swear to you, there is no mentor that is so good that can guide you and you will not lose any money. Especially as a beginner, you will lose money. What I am trying to help you do is not to lose all that you have. And while you're at it, to also learn so that you would stop losing like I have stopped. I still lose, but not like lose everything. Now I learn. Okay? So if you lose and you don't know why you lost, you just threw your money away. But if you lose and you know why you lost, you didn't lose, you only learned something. Okay? Now, another thing I want you to know, another summary is that you should completely accept any risk. Don't blame anybody. Don't say, it's a person that posted signal and I took the signal and I did not set my... There are some people that the most difficult thing for them to do in this life is to take responsibility. Like they don't want that. They can give the responsibility to everybody else. If they hit their leg, I have one of my sons like that. My fourth son. Anything that happened to him, even if he is alone, he will find somebody to blame or something to blame. I'm still trying to change that in his life. I hope God will help me and help him to change that, because it's a very bad thing. There are some people like that. They can never accept that they are wrong or that the risk is theirs. They are taking responsibility for it. But in Forex, you should be ready to accept any risk. If somebody says I'm an account manager, which is one of the reasons why I stopped managing accounts for anybody. I don't do it. I will never manage any account for anybody. I don't do it anymore. So somebody says I'm an account manager. Bring your account, 50% growth, 100% growth in 1 week. Bring your $100 account, we'll make it $200 in 2 weeks. We share profit 50-50, blah, 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 blah. It's good. There are people who can do it. And then you give them your account. And they trade. The first time, they make some profit, you share. The second time, they blow your account and tell you one village, this, that. Fund again. You fund again, they blow it the second time, and they ask you what happened. You say it's that way that blew your account. No way they blew your account. You blew your account by yourself. Accept the risk, because you knew the risk. In trading, there is no broker. Every broker has it on their website that you could lose all your money trading Forex. It is true. The broker is not just trying to scare you and send you away. Yes, it's one of the risks you must bear. So, knowing all this, make peace with your heart, and also know that success won't come overnight. Make peace in your heart. If you lose, make peace. If you win, make peace. I have gotten to the point where win or lose it doesn't affect my emotions anymore. It doesn't. Friday last week, we lost. I took my kids out for ice cream and to have fun. Yes, it doesn't affect my emotion anymore because I know how to manage my risk. I know exactly how much I'm willing to lose. And if I lose it and I don't want to trade anymore, I take a break. Either go and sleep, or take myself out, or take somebody out, or hang out by myself. I don't have a lot of friends. My family is my friend. I don't have a lot of friends. I'm very selective when it comes to friends. Actually, I have a lot of friends, but they are not friends that I hang out with, drink with, you know what I mean by friends now. So I have a lot of friends, but they are business friends, entrepreneurship friends, people I'm either training or people who are training me. Those are my friends. All that is left is my family. Those are the other friends that I know I hang out with all the time. So I get to hang out with them a lot. So most of the time when I travel, I'm traveling on my own. Or unless I'm going with madam, which I do once in a while. But because we still have very young children in the house, she doesn't go a lot with me. But very soon, we'll be traveling around the world together. When I retire, very soon. Okay? So having said that, that brings us to the end of this training. It's very, very important that you understand this psychology and get to put them under check. These emotions could kill you. I don't mean just blow your account. They could kill you. They could give you high blood pressure. They could give you a heart attack. You need to put them under check in this business. So with that, I want to appreciate everyone for showing up in the training tonight. I hope you learned a couple of things. Sorry, I didn't even plug my system while doing all this. Okay, I hope you learned some things, and I hope some of the lessons you have learned today will go a long way to help you grow and be better. And I'm going to be here to hold you by the hand and walk with you on this journey. Okay, hopefully within the week, maybe by next weekend, I'll try and put together another training where we'll look at trading styles, trading strategies. We'll analyze the market together. We haven't really had time to analyze the market together. Okay, I don't like that. So we'll look at an opportunity to analyze the market together one of these evenings. Okay, and then we'll see how analysis is done. I know some people are still having problem with that. So we'll try and do some analysis together and we'll see what we can get. I don't know if I'll be able to do it this week. I'll be terribly busy this week, but I'll still try anyway. If we can do it this week, fine. But if not, next week is there. So maybe on Monday next week or Tuesday next week, we'll organize that training where we can actually analyze the market together. Okay. So do we have any questions from the training today? Okay. Ekene Mbago, you have a question. Okay, you really enjoyed it. Okay, Ekene, you have a question. Go ahead, ask your question. So any other person who has a question, please raise your hand so I can call you when Ekene is done.
Yes, you said something. You said that trading them account is different from trading a life account.
That's correct.
The difference is the regulation. The difference is the regulation. So I didn't fully understand what you mean by the regulation that differentiates the demo account from trading the demo account and the life account.
Okay, now the difference is not only just the regulation. The bigger difference between the two of them is your emotions, basically. Anyways, the difference when you are trading a demo account, you can take one standard lot and you don't look at it twice. You set your stop loss and set your take profit and you remove it from there, and you wait until one of them is hit. You usually can do that conveniently when you are trading a demo account. But when you are trading a live account, you want to sit and be watching the market every second of the day until it either hits your stop loss or it hits your take profit. That's if you are even patient enough to let it hit stop loss. Now, another thing, what I meant by that regulation is not, I think the term I used, regulation, was actually wrong. I think it's more like monitoring. The broker doesn't pay attention to what happens on a demo account. Do you understand that? So they don't really pay attention to it. They don't watch what you are doing. So there's really nothing that is challenging you in a demo account. Unlike a live account. Also, in a demo account, you are not trading against anybody. You are simply trading against yourself. Put it that way. But on a live account, you are trading against other people. See, the chart on a demo account and the chart on a live account may be slightly different. Trust me. They are not entirely the same. There are usually some very slight difference sometimes. You may see your spread on a live account may be larger than your spread on a demo account. You may see that you take 2 trades, one on a demo account, one on the live account, set stop, take profits for them, depending on broker anyway. XM doesn't do that a lot. But some brokers, on a demo account, it will hit your take profit. On a live account, it won't hit the take profit, it will pull back and continue and return back. But if it's a stop loss, your demo account may not hit the stop loss, your live account will hit the stop loss. So some of these manipulations, though you don't see them a lot on XM Global, which is one of the reasons why I love XM Global so much. Okay, they don't do a lot of manipulations there, but there's a lot of manipulations in the forex market. You don't get to experience most of that in the demo account. That's why I tell people that even if you trade demo and you are profitable, look for small money, put on live account and practice with it for some time, so that you really get to feel that emotion that is in the market until you can put it under check properly. I hope you understand that now, Ikene.
Yes, I do. Thank you very much.
All right. Is spreads the same for all lots or prorated? No. Spreads are the same on for all lots on the same currency pair. But spreads are different for each currency pair. The spread on gold will be different from Euro USD, which will be different from GBP JPY. But the spread for GBP JPY is the same thing, whether on 1 hour, 2 hours, 20 hours, 5 minutes or so. It's all the same. It only becomes very obvious when you are looking at it on a very low time frame. But on a very high time frame, you don't see the spread so much. But if you want to see it clearly, switch to the quotes and look at the prices, and you see where they wrote the spread under them. That's where you see the actual spread. All right, John Paul, let me take your question. Please be snappy. Kosi, I'm going to answer this your question to throw more light on the choice of lot size and percent of trade capital to use in trading. I'm going to do a spreadsheet on that overnight today and post it in the groups for you. Okay? So I won't be able to answer that here because you will need a spreadsheet for that. So I'll do that. Okay, how to apply break-even on a running trade? Martin Chinon Soife. To apply break-even, it means to close part of your profits, part of your trade in profit. So if you are using 0.01 and you have only one position, just close it. Don't worry yourself. That's you have secured your profit. But if you are using 0.01 and you have 2 positions or 3 positions, the moment you hit TP1, close one of those positions. Your stop loss was minus 40 pips before. Take it from minus 40 pips to where you entered the trade. So let's assume that you are buying you are buying gold at 1891, for instance. Now you buy gold at 18, or let's say you buy gold at 1890. TP is at 8. Stop loss is at 1890, 1886. Now the moment you hit TP1 at 1892, move your stop loss from 1886 to 1890. That's where you entered. Keep your stop loss there, so that if market retraces from the points where you hit TP1, it will not go and hit your stop loss at minus 40 pips anymore. It will hit your stop loss at entry, which is 0 loss for you, but you keep the initial profit that you took before. That's what breaking even means. So move your stop loss to entry. That's what breaking even means. Okay, explain how to apply break even in running trade. I just did that now. Okay, John Paul does not have any question, but you are raising your hand. If you don't have a question, please put down your hands. I assume these people who are raising their hands have questions. Bethel Akara, you have a question? Bethel, you have a question. Please unmute yourself. Okay, I assume you don't have a question. That was a mistake. Kosi, have I answered your question? Emmanuel Chisom, do you have a question? Okay, Emmanuel does not have a question. Kosi, you have another question? I'll do that later. Don't worry. I'll do that later. Anna, do you have a question? You said what? Yeah. You just hit TP1. Price is still at TP1. If you move your stop loss to TP1, it's as good as closing that trade. because a pullback of 1 pips will close your trade too. So what you should do is put it at entry. When you hit TP2 and you still have an open trade, then move the stop loss for that open trade to where TP1 used to be. So it's like following your trade with a trailing stop, but this time on mobile. Now another thing you can do is to set a trailing stop once you are in good profit. Once you hit TP1, set a trailing stop on all your trades and let it run. If you are on a PC anyway, because that only works on a PC. Emmanuel John, do you have a question? Emmanuel John says, what about Modify? What happened to Modify? Victor Shano, do you have a question? No question.
Yes, sir.
Okay, you have a question. Please go ahead.
Hello, sir. Hello, sir. I have a question.
Go ahead, ask your question.
If you send a signal to us and we trade, can we? Yeah, can you hear me?
I can hear you. Go ahead.
Hello. Okay, what are we? There's a signal from you, and can we leave it and just go to something else?
Of course, once you have set your stop loss and take profits, you don't have any reason to babysit that trade anymore. You can just leave it and go do something else. But be sure that you have set your stop loss and take profits for those trades before you leave it. Okay. Emmanuel Ubenya and Emmanuel John, you have questions. Let's go with Emmanuel John first. Go and check the training of Tuesday. Okay, the final training on Tuesday, or was it Thursday? Go and check our final training on Thursday. I posted it in the group. Maybe I'll post the link to it again. In that training, I explained how to modify your trades. So I'm not going to do that here. We don't have a lot of time. We have already overshot our time by more than 30 minutes. So check that last training. You will see there. Emmanuel Ubey. Yes, you get an 100% bonus on your deposit for this month of February with our broker. After February, I don't know if they will extend it beyond February, but what we agreed with them for now is at least for February. So maybe they will extend it after that. We don't know how long they will extend it. Sorry, you said what? I can't hear you clearly. Are you asking? Can you type out your question? Are you asking if XM Global has office in Nigeria? Your line is breaking very bad. Please type out your question. I can't hear you. Okay, just type out the question. I'm looking at the messages now. Just type it out so that I'll respond to it immediately. Enna, do you have a question? All right, go ahead. Ask your question.
My question is not just a question, actually. It's a kind of trying to make an appeal.
Okay.
It's a signal.
Yep.
The signal will be to us, or the market is usual in many ways, so I don't know if any signal you post, you can kind of shout and maybe preface an explanation on what the market, the analysis.
The issue with that is that I'm mostly trading gold at the moment. So if I'm trading gold, there's no enough time to begin to do that for you. Okay? I can't begin to take a screenshot of all my analysis and then begin to draw all the lines and then begin to post that before we now start taking the trade. Do you understand that? Gold doesn't take a long time. Okay, if I take a trade, if I do an analysis and send a screenshot and send a signal to you, you could take the trade and in 5 minutes you hit your take profit. Meanwhile, if I am still trying to snap the analysis, take a screenshot, do all that, and send it to you, the trade as he take profit will not even finish analyzing. I've not even finished capturing the analysis to send to you. At the end of the trade day, you will miss hundreds, you miss almost all the trades that I'll be posting. The only thing I can do, the only time I can do that is if I am taking a swing trade. And I don't want you people holding trades overnight because you pay swap on it. And how much profit are you making with your $40 capital, $100 capital, $200 capital that you want to be paying swap of $5, $7, $10 on the trade? Even if the trade is negative, they will add it to the negative too. So that's what I'm trying to avoid. I want all trades to end within the day. So that's why I'm not taking day trades or swing trades or position trades for you guys. I'm only giving you scalp trading. And with scalp trading, there's no time to be doing that analysis. Trust me, you don't want me to do that. You will not be able to take any trade. Okay? So that's the issue with that.
Okay.
Yeah, I teach you how to analyze the market. Yes, I said already. I'm going to have another training for that. It can't be today. Is there a particular time I post signal? It's just come at any time. It comes at any time. It depends on my analysis. I'm not going to predict what will happen in the market, but whatever happens in the market will determine what I do or when the signal comes. So Emmanuel was asking, does the broker has a physical office in FCT? Well, I'm not sure there's an office in FCT, but there's an office in Lagos. Okay, there's an office in Lagos, and I believe that they must have sent you an email. If you're in Nigeria, they would have sent you an email about the office in Lagos. But if you have not seen an email about the office in Lagos, check your back office. You should see a message from them about the office in Lagos. There's an office in Lagos, so you can check that office out. So I'm sure we are still looking at opening more offices in Nigeria. Hopefully I can convince them to open more offices. Maybe come and open an office in Abuja if you give me a reason to do that. So organize a training for me in Abuja. I'll come around and train. Give me 200 people to train in Abuja, and I'll train them, and I'll discuss with the broker to see if all 200 of them are registered, to see how we can get an office for you guys in Abuja. Okay, so you have to give us a reason to do that. Lagos has given us a reason to give them an office. I will give them an office. So any city that gives us a reason to give them an office, they definitely will get an office. Okay, so that's about that. So I think that answers all the questions for tonight. So thank you so much for being a part of the training. You can close the call at any time. I recorded this, so I'll try to work on it between today and tomorrow, and then I'll post a replay of it on the group for those who missed the training and would like to catch up. So thank you very much. Have a wonderful night, and see you in the market tomorrow. Have a fruitful week and profitable week too.
Thank you.
You're welcome.